A managing director with Investors Resource. He serves on the Advisor Leadership Committee. He's directly responsible for team and organizational development, office-wide process improvement, financial reporting, client wealth management service. He's married, has 3 children and 4 grandchildren, and he's a frequent speaker for revivals and church growth workshops. And he's here today to try to give you some advice and some suggestions on what you're going to do with all that money you're going to make as a preacher. Brother Dale, good to have you with us. I'll turn it over to him, and I'll be in and out. And so if he needs anything, make sure y'all give him some assistance if you would, please.
Good morning. It is a beautiful morning, Friday morning, and if you had your choice for the next couple hours of 3 things, a root canal, having your toenails taken off, or listening to taxes and finances, I'm not sure if that would be a real easy choice, but I hope that the time that we spend together will be helpful. I can't write you a $200,000 check today, and you probably didn't come anticipating that. But especially for the younger guys, if you get into preaching, into the ministry, and stay 40 years, and we can show you some things that may, and I'm not guaranteeing, but may be able to save you $5,000 a year in taxes without having to take my shoes off. 40 times 5 is what? $200,000. So if the thought of thousands or possibly hundreds of thousands of dollars of tax savings over your lifetime is interesting to you, then hopefully this will be helpful. Hopefully it will be something that will be useful, valuable. I always forget, and I wish I could remember, your wives would probably benefit greatly by being here, those of you that are married. I understand it's streaming on the web, so you might want to grab the phone and say, hey, listen, especially if she's involved a lot in the finance and in the working of that section of your life. What we'll do today for the next little while, does anybody in here have a watch? Timekeeper or something? All right. Well, around 10:15, kind of let me know. We're going to take a little break right there. If you have a watch now, when you start preaching regularly, just go ahead and get rid of it. It won't mean anything. But you may need it for other things in life. We're going to talk about 2 or 3 different things today. We're going to talk about new tax laws. We're going to talk about just some basic financial things. A lot of our time is going to be spent on discussing specific ministerial tax information, and then we're probably going to conclude about talking about some gifting things that you'll be able to use in your work and in your ministry. How many of you will be graduating soon? Okay, so for those of you that are graduating soon, it's going to be particularly important because some of you already have, others are in the process of probably setting up your first agreement with a congregation to go to work on a full-time or a regular basis. And there's some real important things. We'll be somewhat informal. If you have questions, feel free to raise your hand. If you want to hold them till the end, we're probably going to have a Q&A at the latter part, so you can do that either way, whichever way works better for you in regard to the question session or the question and answer session. In regard to kind of kicking off, you probably are keenly aware there was a huge tax bill that was passed around December of 2017, about 1,000 pages of that, and most of us don't really care so much about the 1,000 pages. What we're concerned about is how does that affect us. And so what I wanted to talk about today is just a few of those things in regard to how you may potentially be affected in regard to the new tax law. The first of those is there are new tax brackets. There's still 7 tax brackets, but the percentages are lower, the rates are lower, and so generally speaking, if a person had similar income, they would pay less in taxes. There's an increase in standard deductions. The married filing jointly went from about $12,700 to $24,000, which off the top of my head would say, well, that's a good thing. We're increasing standard deductions, but we're going to see something else that kind of has an impact or a bearing upon that. Far less people will be itemizing in 2018 going forward, and that's when most of the tax laws take effect. So far less people will be itemizing, which means their charitable deductions, mortgage interest, property tax, state tax, and things like that are not going to be as important as they once were. That'll have an impact on some of us in different ways. But one of the things they also did was they eliminated the personal exemption. So in 2017, for instance, a person that had used the standard deduction would have approximately $12,000 for married filing jointly for standard deduction. And then if there were just the 2 of those, there would be another $8,000, $4,000 each for personal exemptions, for a total of about $20,000, in which that money would be deducted from adjustable gross income to get to taxable income. Going forward, that person would use $24,000 instead of the standard deduction, and there are no personal exemptions. Some people that helped, some people that didn't help. People that had quite a bit of itemized deductions lose the personal exemptions. People that had several children or a number of children, sometimes that hurt there. So there's an impact there of the elimination of personal exemptions. There's a tax now, or a cap now on itemized deductions on state and local taxes. It was relatively unlimited to this point, but now it's $10,000 if you itemize. For some people, that doesn't matter. For people in low tax states, that doesn't matter a lot. People in higher tax states, that can pose some additional difficulties in regard to the paying of taxes, not so much from a difficulty standpoint, but from the standpoint of having to pay more taxes. There's the repeal of the tax on people that do not have health insurance. If you remember Obamacare, you remember that there is a tax. There is a repeal on that. You still need health insurance, and we're going to talk about that a little bit later on, but the repeal on that actually doesn't take full impact until 2019. One of the things that also is helpful is the child tax credit. If you have children under the age of 17 at the end of 2018, then that child tax credit that was $1,000 now is increased to $2,000, and that's a full credit. That's not a deduction. A deduction takes money away from income, and then you pay the tax on it. A tax credit is a dollar-for-dollar tax credit. Also, some folks have children that are 17 or will be 17 or older, and yet they're still dependents, and there was a family tax credit of $500 that was created for that particular situation. So if you have children 17 or older, or other dependents in the house, maybe a parent or someone like that, there's a possibility of a tax credit there. I have no clue what standard meant. As I was kind of glancing over this, apparently when I stuck that in the PowerPoint, whatever words were to follow did not follow or got magically erased. So we'll move on to interest on home equity loans. They are no longer deductible. There are 2 or 3 really narrow exceptions to that rule, but in the past, what people would do a lot, they would just take, if they had equity in their home, borrow money against it, maybe to buy a car, maybe to do something else, but that deduction has gone away. It's not a part of the new tax law, but for 2018, the standard mileage rate is 54.5 cents a mile. So if you're going to be working with a church and they're going to be reimbursing you for mileage, that mileage rate is 54.5 cents. You can either use your actual expenses or you can use the standard mileage rate. And 99% of the time, you're better off using the standard mileage rate from not just a bookkeeping, but from a financial standpoint as well. Those are certainly not all of them, but those are just a few of the new tax laws that may impact you. Anybody have any questions on any of these or other new tax laws as they might impact you? Okay, let's talk about finances. We live in a world where it's impossible to live without the interaction of money and finances, things of that nature. That's not going to change when you become a preacher. And so it's really a valuable, important, and a critical part of your life that you're able to take care of your financial situation in a way that benefits you, that benefits your family, and most importantly, that glorifies God. So we want to talk just about some principles this morning, pretty basic in nature, but worth thinking about. First of all, be serious about it. I think there's a propensity about different things that for some are easier than others. For some people, working with finances and dealing with finances come relatively easy. At least there's some level of appreciation. I don't know if enjoyment's the right word. But for other folks, it's just yuck. I don't like finances. It's a hassle. It's a bother. It's a whatever. If you're in that latter category, you got a good thing to add to your prayer list because you have to deal with it. I have to deal with it. There's no way around dealing with it and being serious about it, giving it attention. What do we generally do to things that we don't like that much or don't enjoy? What do we generally do with those things? We ignore them. We put them aside. We procrastinate. That won't be good in this arena. And develop, create space, put time for dealing with your finances. If you're married, work closely with your spouse in dealing with your finances because you're going to be dealing with them all your life. How many of you are planning to go in preaching because you thought it was the easiest way to get rich? All right, nobody. And you'll be taken care of. God will take care of you. The church will take care of you, but it'll be important. And if you made $1 billion a year, if I made $1 billion a year, which none of us do, God is just as concerned with our being good stewards at whatever level that we are, particularly as you began in your work. If things hold true to norm, you're going to make more money later on than you are right now. And so the ability to be serious about finances, the ability to target time and energy and effort in regards to that is going to be important because if you don't, it'll impact you. It'll impact you spiritually, it'll impact you emotionally. And it will hinder what you're doing, which is the greatest work in all the world, sharing the good news of Jesus with other people. The second thing sounds simple, but it's not always that easy. Spend less than you make. If your outgo exceeds your income, your upkeep will be your downfall, a man said one time. And that's exactly true. Spend less than you make. It's kind of like saying, live for Jesus. Okay, that's a good thought. That's a good idea. That's a good target. But it's not as easy as just saying it. So you'll have to give time. You'll have to give attention to taking care of those things. It won't be easy sometimes because we're going to talk about things that sometimes come up unexpectedly, things of that nature. But just go ahead and make a habit. Go ahead and make a practice of spending less than you make. Be a good steward. One of the things that you're going to talk about as you preach is stewardship. Stewardship of time, stewardship of ability, and stewardship of money. And so one of the most important things to be able to teach something effectively is being able to live it and to be able to do that. I don't know. Are any of you familiar with Brother V.P. Black? Okay, I see some hands. Brother Black was one of the most wonderful gentlemen, one of the most wonderful preachers that I have ever known in my life. Brother Black has since passed away. He probably did more, at least that I can recall in my lifetime, he probably did more in regard to the teaching on giving and stewardship than anyone else I know, and helped numerous congregations and numerous individuals in that way. There's some books that he wrote. I'm pretty sure there's at least 7 of them. I have a couple of them with me. This one's called Lord, Teach Us How to Give. It's a workbook. It's a class-type workbook. Another one is called My God and My Money. And some of the other ones that he has written are called Growing in Stewardship, Rust as a Witness, Giving Our Way to Prosperity, Giving versus Getting, The Proof of Your Love. I would encourage you to get those books. You can get them for it's less than $50 for all of them. And here's what I would encourage you to do with them. Take however you like to read or whatever. What I'm doing currently right now is I'm taking each book and I'm reading a chapter a day. So if you kind of do the math, in less than a quarter, you can get through all 7 books. What that will do tremendously for you is 2 very positive things. Number one, you will probably have as good a study on stewardship as you can ever have. Number 2, it's going to encourage you personally to be the kind of steward that God wants all of us to be. What we preach is only effective if we practice what we preach. And so in regard to stewardship, Brother Black, and there are other books out there. I'm certainly not reflecting in a negative way on other ones, and you may have some, you may have seen these, and you may have some you like better. I'm just more familiar with these and more familiar with Brother Black personally, and so be a good steward. Keep in mind, it all comes from who? God. Every bit of it. None of it's mine. None of it's yours. We are caretakers. We're stewards. We're treasurers. Whatever way you want to look. I work with a financial firm, an investment firm, and we work with people that have various amounts of money. Some people have large amounts of money. But what I know is this. I know it's 0 to 0. You say, what do you mean 0 to 0? I read, and you probably did too one time, we brought what into this world? Nothing. And what are we going to carry out? Nothing. So we're living life from 0 to 0. Now we have to deal with money and those financial things in between the zeros. But at the end of the day, there's not going to be a Wells Fargo truck following the hearse to the cemetery, is there? It doesn't happen. It doesn't work that way. Now we can lay up treasures in heaven, but in regard to stewardship, I'm going to give an account. You're going to give an account. And just as the other areas of my life and your life, I want to be able to do that with joy. I want to be able to say, Lord, I used your money wisely. Lord, I used your money effectively. Lord, I used your money to your glory in my life. And so these books will provide a lot of material, a lot of information, give you a lot of resource as you share that with others. I can't mandate and wouldn't if I could, but I certainly would make a suggestion that congregations every 2, 3, 4 years spend a quarter just studying stewardship. There's a couple reasons for that. Number one, being able to stir up our pure minds by way of remembrance is always an advantage. But secondly, if the congregations are doing what they ought to do, there are going to be some new Christians over 2 years, over 3 years, over 4 years. You could take Brother Black's 7 books and every 3 years use one of them, and for 20 years you've got some excellent material on stewardship. You'll see people grow. You'll see the church grow. I just have never seen a lot of stingy Christians that were really a lot of value in the kingdom of the Lord. And so helping us to grow. And so I want to encourage each of us to be a good steward. Don't take a job where you cannot live comfortably. And I say that particularly to those that are about to go out and those that will probably a year or so from now. There's a danger, and the danger is this. I'm I want to preach, and I want to preach so bad, and God's going to take care of me, and this doesn't seem like a whole lot right now, but somehow we'll be able to make it. Sit down and do the math. Do the numbers. Because in a lot of situations where you'll be going in the beginning, the church numbers will be smaller. The church budgets will be smaller than probably places that you'll preach later on. Some folks with good intentions will want a full-time preacher, but the finances just aren't there. And you can't squeeze blood out of a turnip, and if you get in a situation where you cannot comfortably live and you start trying to scrape to get by, and you start saying, well, maybe we don't need health insurance, or maybe we're going to lessen this or lessen that, or do something else. I'm not saying to live like a king. I'm just saying you need to be able to do the same thing everyone else in the congregation does. You need to be able to feed yourself and your family. You need to be able to clothe yourself and your family. You need to be able to provide a place to stay and transportation and to be able to do the ordinary things of life. So you may go to a place and you may fall in love with the people, and you may fall in love with the leadership. But make sure that you can live and you can be okay. Not just, well, okay, we figured it out, and at the end of the month, we're going to have $3.17 left. Well, you know as well as I do, something's going to happen to that $3.17 and then something that wasn't planned. So choose and pick a situation. Sometimes you may need to say no to a situation that otherwise you might say yes, because when finances become a problem, if finances become a problem, it's going to affect a lot of things. It's going to affect your ability to preach, because your mind's not going to be able to be focused. It's going to affect, if you're married, your relationship with your spouse. One of the key causes of divorce, and not even of divorce, but just turmoil in the home, is financial difficulties. So make sure, be sure that you're going to be able to live on the money that they're going to be able to pay you. A lot of times, smaller congregations will pay everything they can to try to get someone to come and to preach for them. And I say that to say this, because if you get a year into it and you say, wow, we kind of underestimated our budget, we kind of underestimated our expenses, we really need another $5,000 a year, we need another $10,000 a year, that church may be strapped. They may not be able to do that. And then that puts you in a very difficult position. Manage your money. Don't let your money manage you. It won't take care of itself. You'll have to take care of it. It's really easy to spend money, isn't it? It's a lot easier to spend it than it is to make it. You know, we got these things called debit cards and these dinosaurs, I guess now, called checks. But we got ways now you can get on your computer and you can go online, and in 5 minutes you can spend your month's salary, can't you? It doesn't take long at all. Just hit this button, hit click, hit whatever. And so it's important. It's important to budget. It's important to maintain and to stay within that budget. It's important to make sure that it's not just, I think I want that, I'll get it. Impulse buying is a challenge for a lot of folks. And so make sure that you're in charge. We are stewards, but once it comes into our care, manage your money. Don't let your money manage you. Be careful about debt. Be careful about debt. Most people at some point in time in their life borrow money. I know there are various people that say various things. I don't have an issue with that. I don't believe that the practical application of the words in the Bible, don't owe any man anything, means you can never borrow money. That means we need to pay our debts and we need to pay what we owe. And so it's okay if it's within the framework of our budget and the framework of our finances to borrow money for certain things, but be oh so careful. Credit cards can pile up so quick. your mailbox will get filled up with, here, sign up for this free credit card. We'll put you in here, and they will give you limits that you don't need and that I don't need. Banks will loan you more money on a house than you can really afford to pay back. People are more than happy to give you money. How am I going to pay it back? And so my encouragement always is to be careful. Number one, do I need this? If you live in your own house, and I encourage that, and we'll talk about that more when we talk about housing allowance. But if you live in your own house, for most of us, we didn't have the money just to pay cash for our first house, or maybe our second house, or maybe our third house, or maybe our fourth house. How does that fit into our budget? How does that work in what we're doing? And so be extremely careful in regard to debt. Use it wisely. Save some, share some, spend some. This is just kind of a philosophy that I encourage about any money that comes in. Any money that comes in, obviously, any finances that comes in, who gets the first part? God. The first fruits always belong to God. And then I encourage beyond that to save some, to put some back. We're going to talk about that a little bit more. And then certainly you're going to want to spend some. And there are things that we're going to need. But I don't want to try to tell you what that division is, but I'm just saying if you began operating under that procedure, everything that comes in, I'm going to take a segment that goes to God and to other people as I'm helping. I'm going to take a segment that I'm going to save, and then I'm going to take a segment that I'm going to use for the necessities of life as well as the enjoyable things of life. There's nothing wrong with spending money on things that we enjoy that are not a necessity. If you began to look and think, if we just spent on the necessities, we'd have a whole lot less things than what we have. But when we have an order, when we have priorities about how we do that, what often happens in the world, sometimes in the church, and sadly sometimes among us, is we spend a lot and then we don't really have a lot to save, or we don't really have a lot to share with God and with others. By simply reversing that order, we're going to be in a lot better situation. Plan for your retirement. Now, I understand the spiritual retirement, that's heaven. But in all likelihood, and particularly the younger ones today are thinking, wow, I can't even imagine retirement. I want to preach all my life. I want to die preaching. That may happen. But it may not happen because of things that you don't have any control over. It may be that you have illness or an inability to work at some point in time. It may be that your health just declines to the point with age that you can't preach any longer. It may be that there comes a time when whatever age you are, that's not the age in vogue. And congregations right now, and some of you may be going through a part of this frustration as you're looking for your first jobs, you're younger and they want what kind of guy? Older guy. Want a guy that's a little bit older. Well, you get a little bit older, and then you get a good bit older, and then they're wanting a what? Younger guy. So let me go ahead and tell you, you will reach a peak of maximum attractiveness. It'll probably come at 2 o'clock in the morning one morning and last about 3 minutes, and you'll never know it. But heretofore, you were too young. Now you're too old. Heretofore, you didn't have enough experience. Now you got too much experience. And I say all that to say this. Who's going to plan for your retirement if you don't? Does the church have some kind of nationwide, federal, or state retirement program for preachers? They don't. There are certain denominations that have certain things in regard to that. In our brotherhood, we don't have that, and rightly so. But you're going to need to plan it. Now, you can work with congregations. And one of the things that we'll talk about a little bit later on is setting up agreements with them. I don't think it's wrong. As a matter of fact, I think it's right and good for churches to take care of preachers. And I think it's right and good for them to take care of not just the immediate needs, not just food on the table for next week and next month, but for those preachers for when they will ultimately retire. Especially, and we'll talk about that when we talk about housing allowance, but if you're living in a preacher's house and you get to the point where you're going to retire, you want to retire, who's going to live in that house then? Next preacher. It's not going to be you. And, well, I want to retire and stay here. Well, we can't. This house is for the next preacher. And so if you've not made some plans and you may be thinking, well, I'm young now and I'll do that. I'll do it later. Kind of that procrastination thing. Let me tell you something that happens way too often. I'm young now. It takes every dime I've got just to make it. But now when I get a little bit older, I'm going to be able to put some back from retirement. Well, you get a little bit older, and maybe you have a child, and you have a couple children, maybe 3 children, and now I'm making more money, but where's that money going? Diapers, clothes, school, all this kind. Well, when I get all the kids taken care of, then something else is going on, and health insurance is increased, and then a person looks up, and they're really close to the time that they might want to retire or choose to retire, and nothing's been set aside. There are no provisions. What do you think the likelihood of going back to those congregations where you preached or have preached and say, hey, can you guys fund a retirement plan for me? What do you think the likelihood of that happening is? It's not very good. Now, I don't say that negatively toward the church. They're interested in whoever their preacher is at that point in time. But I'm saying this, most men that are good men as elders or leaders, if you talk about when you began your work with them, here's some things I need. They understand that too. They either have retired or want to retire. So you need to be proactive in working with your congregations in regard to retirement plans. And we'll talk about that a little bit more. Put a star by this one. Have an emergency fund. We talked about budgeting, and that's all well and good. And here, X amount's what it's going to take me weekly or monthly to live. But if you don't have one yet, I want you to start today, tomorrow, or as soon as you possibly can, developing an emergency fund. Why do you need an emergency fund? For emergencies, exactly. Things happen. They do. Anybody ever had a cart tore up? Somebody was raising their hand really quick. Anybody ever had a washing machine that broke down? Dryer, other things, unexpected health? There are things that are going to come up in life that you cannot budget for. Now, when I say that, somebody argues and says, okay, I put 15% of my budget in for emergencies and things like that. But generally speaking, my recommendation is have your budget for your normal life expenditures. Then set that emergency fund set up to take care of those things that are truly emergencies or out of the ordinary. How much? Well, normally it's suggested to have anywhere from 3 to 6 months of regular living expenses set aside for emergencies. If you can get 12 months, that's great. If you can get 9 months, that's great. You say, well, I don't have that. I can't do that right this minute. Start toward that and make that a part of your budget. Here's what's going to happen sometimes, and to some of you, you're going to go to a work that you think is really good, and it starts off really good, and then something happens. And there are guys, and I could tell you way too many stories, and I'm not trying to scare you today. I was in local work for about 30 years. I had a tax and accounting practice and was doing local work as well. But there are guys that got up and preached a sermon, and after the sermon was over, the elders and leaders called them back and said, hey, we don't need you anymore. We don't want you anymore. And there's no severance pay. And if you're in the church parsonage, you got till dark to get out. Sometimes a little bit longer. You don't know. You don't know what's going to happen. That's another reason that it's really good, and you've already heard me allude a couple times to compensation agreements, is to get an agreement with a place where you go that if for some reason they decide they no longer want you as their preacher, that they will pay you for 30 days or 60 days or 90 days or some period of time, so that if there is a change, you're going to have something to be able to rely on. If you get let go on Sunday, it's probably going to be difficult to have another job by next Sunday or the Sunday after, the Sunday after that. So if you are not a preacher, if you were not going to be a preacher, I'd still tell you to have an emergency fund, because there are things that come up. But transitions may change quicker than you think, and you're going to need something to rely and fall back on to be able to do that. So be serious about having an emergency fund and contributing. Make that to some degree a part of your budget as you're growing that, to where you get to the point where if the car tears up, car expenses are really cheap, right? Not. It doesn't take anything to spend $500, $1,000, $1,500. Same thing with a lot of other things. Health insurance now, most health insurance plans have really high deductibles. And so if you haven't planned that within your budget, then you can have some minor things done and it really be expensive. So set up an emergency fund. Be a good example in your finances. I'm not saying necessarily get out and broadcast what you do financially, but I'm just saying when you're a good example, it's like everything else. It'll manifest itself. If you're not a good example, that'll show up too. That's going to hurt you. It's going to hurt the church. It's going to hurt the influence of the church. And so one of the things that's really valuable and really important is that you're a good example. Because one of the things that happens is you become a counselor. Whether you want to or not, you become a counselor. And by this I mean people are going to come to you. When they develop trust in you, when they develop an appreciation and a respect, they're going to come to you. And one of the things they're going to talk about fairly often that they're struggling with is this very thing. They're going to talk about struggling with finances. And you don't have to be Dave Ramsey, but if you're already doing a good job yourself and you know some of the basic things we're talking about here, then it's going to be a lot easier. It's going to be a lot easier for you to be able to help and aid and assist them and to help them to get back on a good track. I know that's only a few just very basic principles. Anybody got any questions on anything that we've talked about on those things, the finance side, before we kind of move over more into the preacher and tax part? I'm doing one of two things. I'm either doing this so great that I've left nothing unanswered, or I've confused you so bad that you don't even know what questions to ask. Well, let's move on. Let's move on to who is a minister. So now we're going to get into probably the part that you thought was, well, this is what we're going to be talking about today. So who is a minister and what unique things transpire and happen in regard to taxes and finances there? Generally speaking, the IRS considers a minister to be a person who is licensed, ordained, or commissioned by their particular religious body. Do you see any kind of problem or issue with that in regard to us? We don't have any of those. So it's pretty cut and dried for religious organizations that have those. So what about us? Who's a preacher? Who's not a preacher? Who's a minister? Who's not a minister? They've got a kind of a test that's got like about, I don't know, 7 or 8 things in it. But I just wanted to mention a few, how the IRS would determine if a person is a minister or not. Some of their criteria is administers the sacraments, and we're kind of going, whatever, in regard to that. Conducts religious worship, even though you're not in charge of the worship per se. Preaching kind of falls into that category. Has management responsibilities. The one we just mentioned, ordained, licensed, or commissioned, which we're not. And then considered a religious leader by his denomination. You say, okay, so what does all that mean for us? Basically speaking, if you're preaching every Sunday at a place and you're under the guidance and the direction of the elders or the leaders of that church, you're going to be considered a minister for tax purposes. There are other variations of that. Sometimes people work in missionary capacities. Sometimes people work where they're not working for a specific congregation, but they're speaking by appointment or things of that nature, and would again be considered a minister. And you say, well, what does it really matter? Why does it matter if the IRS classifies me as a minister or they don't classify me as a minister? Well, there's several things in regard to that status in regard to ministers that do make a difference. When we take a look and see in regard to that, ministers have a dual status, a dual tax status, and they're considered self-employed for self-employment tax purposes, and then they're also considered employees for W-2 purposes. It's probably the most unique profession tax-wise in our country because most people are in one camp or the other. If I go down to the local Walmart and I work for that Walmart and I work 8 to 5 Monday through Friday, I'm their employee. And as their employee, they pay me, they withhold Social Security, and they withhold self-employment tax or Medicare, and then they match what they withhold. And so as that employee, I'm going to have taxes withheld, and I'll get a W-2 form, things like that. But if I decide I want to go and I just want to paint houses, and I go and I just knock on people's door and say, hey, I'm a painter, I'll paint your house for $500. I'm not that person's employee. I am considered an independent contractor. I'm self-employed. And when I get through painting that house and they give me $500, they didn't take any federal tax out or state tax out or Social Security tax out or Medicare out. I'm responsible for all of that. They just paid me a flat amount. So an employee or an independent contractor, self-employed. But the IRS views ministers as dual status. For W-2 purposes, we are employees of the church, and you should receive a W-2. Now, I know there are a lot of congregations that don't do this, that don't comply with this, and all I can do is warn and say, hey, this is what you need to do. And sometimes the philosophy is, we've done it this way for 50 years, nobody's ever said anything. Well, just because nobody said anything doesn't necessarily mean you're doing it right. If you send your income tax return in and nobody says anything, doesn't mean it's right necessarily. It just means nobody audited it. You only have about a 1% chance of getting audited. And so one of the things you want to talk to your people about when you go for that first job is, how do you report my income? Do you report it on a W-2? Do you report it on a 1099? Do you not report it at all? And I've seen all of that over the years. The preferred way is that they give you a W-2 form. Now, having said that, it looks a little bit different. It has nothing in the box for Social Security wages. It has nothing in the box for Social Security withheld. Has nothing in the Medicare box wages. Has nothing in the box for Medicare wages withheld. So the minister is an employee for that part, but for Social Security or self-employment tax, the minister has to pay or is responsible for all of his, both the half that you would have had withheld if you worked for Walmart and the other half that would have been matched by the employers. That's almost 15% that you have to pay. That needs to be factored in when you're figuring out, okay, so how much are my taxes going to be? I'm going to have to pay the federal tax. I'm going to have to pay self-employment tax. If I live in a state that has state income tax, I'm going to have to pay state tax, and that helps in your budgeting process as well. So keep in mind you're going to be in a dual status role. Keep in mind there may be places you go that when you say something about dual status, they're going to look at you like you got 7 ears. They don't know, hadn't seen, have never done it, may or may not be willing to do that. You can still you can still file your taxes correctly even if it's not reported correctly to you. And if there's ever a problem, it's on the church and not on your situation. But I strongly encourage, try to make sure, and we've worked with, when I was working in that arena, a number of churches. I've got a really good friend that's a deacon at a congregation in Alabama that's a CPA. He continues to work with a lot of ministers, works with a lot of congregations in helping them set up the things that may be missing or that are not going on, helps them with the filing, helps them with reporting, things like that. And I'll be happy at some point in time to give you his number if you've got an interest in that. But know that you are in a dual status situation, and make sure that that's taken into account when you do your taxes. So what are the best tax advantages for ministers? Compensation agreement, which we'll look at in detail in just a moment. What the easiest thing for churches to do is this, just to say, we're going to give you X amount a week or X amount a month, and you just do with it whatever you want. That is by far, without doubt, absolutely the worst way you possibly can be paid, because you are going to pay the maximum taxes if they just say, here it is, do whatever you want to with it. What a compensation agreement does is it divides the money up into different areas and divides how you get the money paid up. What you want to assure the congregation up front is that you're not paying me any more money. I'm not asking for more money. I'm just asking you to divide it, pay it, reimburse it in a particular way so I get the largest tax advantage in that particular situation. The second advantage is the housing allowance, and I'll talk about some updates on that a little bit later on in the presentation. But hopefully you're going to be living somewhere. Hopefully you won't be under the bridge or in a tent, and hopefully you're going to be living in a house. What are generally the two housing arrangements that you have as a preacher? They provide a house, or you provide a house. Now, my recommendation is always the same. You need to provide your own house for a lot of reasons. If they provide a house, what kind of equity are you building up? None. Zero. And so when you leave, and you may be very fortunate, you may go one place and you may stay in that place from your first work, may be your last work, and you may be there 50 years. How often does that happen? Not very often. I don't know that I've ever known a person that only had one work. So you're probably going to have a number of works in your career, hopefully not one every 90 days, but you're going to have a number of different ones. And so sometimes it's okay if you're providing your own house to rent for a little while until you find out, hey, do I really like the area? Does this seem to be a good fit? What's the housing market really like? Other times, with the help of good brethren, you can go in and you can find a house at a good price that's marketable if you leave and things of that nature. But the housing allowance, when it's properly drafted, is deducted from your gross pay, and you don't have to pay income tax on that. Housing allowances can be a significant amount. It can be $10,000, some of them $20,000, some of them more than that. Well, if you're kind of doing math in your head and saying, $10,000, even if I was in the 15% tax bracket, that's $1,500 that I'm saving right off the bat. The church didn't pay me any more money. We're just taking care of some financial arrangements. You do have to pay self-employment or Social Security tax on it. So while the housing allowance is not taxable for federal and state purposes, it is taxable for Social Security purposes. The third thing that, to me, is the best advantage, or among the best advantages for ministers, is an accountable reimbursement plan. Again, you're not asking for more money. What you are asking for is the dividing up of the way money is paid. So if if you just get a lump sum and you do whatever you want to with it, you're still going to have expenses that you're going to have in regard to monies that you spend in the work of the church. And so we talked about the standard mileage rate. There are times you'll buy office supplies that you personally need. There'll be times you may go to lectureships or other things. There are a variety of different things that you'll use, and they expect you to use that out of that one lump sum pot of money. But if you set up an accountable reimbursement plan and they pay you as you spend this money and as you turn it in, that money is not taxable. It's not taxable for federal purposes, it's not taxable for state purposes, and it's not taxable for self-employment purposes. So that money is literally tax-free. Now, there's an even greater reason to have an accountable reimbursement plan now, and I haven't seen the final regs on the tax bill that was passed, but unreimbursed employer business expenses or unreimbursed business expenses were eliminated from that original plan. Now, I, again, haven't looked far enough to see if that includes Form 2106, which is where you would put these. But if you're not able to itemize, you're not going to get the advantage of it anyway. If you are able to itemize, it's reduced by 2%, and if the Form 2106 business expenses are eliminated, you've gone from totally tax-free to totally taxable. And so it's really important to set up an accountable reimbursement plan. I want to walk kind of through an example. You may be thinking, here's where the water's getting a little bit muddy, and so how exactly would that work in actuality? So let's just say when you go and you sit down with a group of elders or leaders, they say, okay, we're willing to give you $50,000 a year to come work here. That's what we can afford, and that's what we're willing to give you. And you say, okay. So we're looking at a salary, we're looking at an accountable reimbursement plan, we're looking at a retirement designation, and we're looking at a housing designation. I'd mentioned retirement earlier because, again, you're going to be responsible for doing that. But if you bring that up to them and say, okay, I want to go ahead and be preparing that, they'll do one or two things in all likelihood. They'll let you, within the framework of the money they've given you, do something in regard to retirement planning. Or they may come back and say, I tell you what, if you're going to put X amount in, we'll put X amount in too. And you may get additional money just because they see you as being a good steward in that sense. So let's take our numbers and let's look at them a second. And let's say, okay, we're going to look at salary of $38,000. And we're going to look at an accountable reimbursement plan of $8,000. And we're going to look at a retirement designation or retirement amount of $4,000. And so what that does, that totals $50,000. So here we've taken the $50,000, and instead of salary being $50,000, how much is salary now? 38. All right. How many of you would rather pay tax on $38,000 than on $50,000? And what have you done? You've not gotten any more money. It's just the way that you've set up the plan. It's just the way that you've divvied that up. Now, not only then do we do that, but let's throw in a housing allowance of $12,000. It's not an additional $12,000, but it's a part of that. So now what we have is we have a salary, accountable reimbursement plan, a retirement designation, and inside that salary is $38,000. So we go and we look and we say, so what does the W-2 look like then? You got your salary of $38, you've got your housing allowance of $12, which comes away from that. So now you're paying tax on how much? $26. We've almost cut your taxable amount in half, and how much more did the church give you? None. Now, if you can cut your tax in half and tell the church, hey, look, I can cut my taxes in half almost, and you don't have to pay me any more money, we just need to do things a little bit differently, what are they likely going to say? Sure. Now, you don't have to make this an acid test, but if they say, nah, we think we'll just keep it like it is, that may give you a little insight about how they're going to treat you about other things down the road. That may tell you a little bit about how working relationships may go in regard to other things. And so what we've gone from is we've gone from a $50,000 amount that you would have had to pay tax on to a $26,000. Now, you'd have to add for Social Security the self-employment tax or the housing allowance of $12,000 back, but you still are only paying Social Security on $38,000 instead of on the $50,000 otherwise. Your accountable reimbursement plan of $8,000 is totally tax-free. Your retirement plan, you could set up a 403B. You could set up a simple IRA plan that they could directly contribute to, and that keeps that from being taxable. So there's some neat ways to do that. Let me tell you about something that I've just discovered recently that could additionally be of help to this. There were some changes made in regard to health insurance. Well, let me just wait on that, but there's another option that we'll talk about a little bit later in regard to that. But does everybody understand, does everybody see the how we got to our numbers here? Any questions on that? Yes, sir.
You mentioned the accountable reimbursement. Is that money that's there only when you turn it in, like the expense? In other words, is it kind of use it or lose it?
Great question. Great question. So the accountable reimbursement plan is a situation where you set up an amount in advance, and the church says, okay, we're going to set this block of money over to the side. And then you have to turn your expenses in to get it. You have to do it on a dollar-by-dollar basis. You can't say, well, it's a $6,000, so they're just going to give me $500 a month, and we'll take care of that as the year goes by. You have to turn your expenses in as you incur them. Some months will be more, some months will be less. Now, two questions arise quickly. Will I remember to turn it in? You'll remember to turn it in 100% of the time. You say, how do you know that? Because you don't get paid to what? You turn it in. So you're not going to leave money laying on the table. The second one is kind of the use it or lose it kind of thing. Now, here's where, I don't want to say it gets a little tricky, but in order to comply with the law, in order to comply with the federal law, and we always want to comply with the federal law, you have to guarantee, or when the congregation says, we're putting an amount on here of $8,000. In order to comply with federal law, if you only spend $7,500, the congregation is not guaranteeing you're going to get $8,000. They're only guaranteeing you're going to get what you turn in up to $8,000. You might be thinking, well, I'm going to lose $500. How good a deal is that? While that part is true, that you can only get reimbursed what you turn in, does the church have a right at the end of the year to give you a bonus? Yes. Sure, they can give you a bonus. So if they're looking and saying, hey, we promised a cap of $8,000 and you only spent $7,500, can they, if they choose, give you $500 as a bonus? Absolutely. What can't happen, they can't tie the two together and say, we're giving you the $500 bonus because you didn't get to the other. They could give you $500, they could give you $300, they could give you $5,000, they could give you $50,000. And most of the places where I've ever been, and personally preaching and also working with the elderships and leaders in regard to this, they would, generally speaking, do that. And they would say, we're going to take that into account of what we had budgeted, and we may well, give that money. And so, and in virtually every case they would, but not as part of your accountable reimbursement plan, but as a bonus that they chose to do. So rarely, if they want to stick to the letter, it's a use it or lose it. But there are ways of being able to get. Now, if you get the $500, it's going to be taxable because it's not a part of the accountable reimbursement plan, so the bonus is taxable. But I'll take all the taxable money they'll give me all day long. So if I'm only paying a percentage, they can give me bonuses or whatever on that. So, but yeah, that's a good point. Go ahead.
The other question I had about that is what can you use that money for?
Okay.
Can I buy books with it?
Sure.
Can I buy suits, that sort of thing?
Okay. Yes, no, yes, no. Okay. Let me go back and kind of clarify that. Anything that is reasonable or ordinary in your course of work as a preacher, you can use. Now, I want to deal with the suits directly. Clothing, they say no. And you might be thinking, well, how long are you going to preach if you get up in the pulpit naked? Well, probably not very long. But they consider suits as ordinary clothing. Now, if you changed religions and had to wear collars or special things of that nature, you can. But just like what I have on today, sometimes I'll wear it at my regular workplace or something similar. I can't take that off at my workplace or get reimbursed at my current workplace because this is considered ordinary clothing. And so you can do books, you can do lectureships. If you will remind me, I'm going to give you some contact information later on. I've got a form that covers pretty much, I'm not going to say everything, but it covers most of the things. You got things like travel, you got things like books, you got things like lectureships, you got things like food if you're going out to eat with other members or if you're preparing food for people that are sick or are in the hospital. Just kind of keep that phrase in your head, anything that's ordinary and necessary in your work. And I say this, don't abuse it, because I've had people to ask me all kinds of questions about certain things with good intent of saying, well, okay, so mileage, for instance. If I go to the hospital and I'm visiting someone, that's clearly ordinary and necessary. I've had folks say, well, okay, if I go to the grocery store, I'm a preacher all the time, so I might bump into somebody and I might invite them to church, so can I count my mileage there? I'm like, well, you can. I'm not sure the IRS would allow it. I wouldn't do it because that wasn't your primary purpose for going. Now, if you're going to the grocery store and your intent is to meet the meat market manager and talk to him and try to set up a Bible study, and then, oh, by the way, while you're there, you get your groceries, I don't have an issue with that. But really what it comes into is primary and secondary. What was I primarily doing here? Same way if you go to the hospital and you stop back by and get your groceries on the way home, you got paid in effect for going to the grocery store, but it wasn't for going to the grocery store. It's for going to the hospital. You just made a convenience. Somebody else had a question. Yes, sir.
With the retirement designation, since you're not paying federal income tax on that money, are there restrictions in how you channel that money into, say, an IRA, to a Roth or a traditional?
Sure, that's a good question. The two places that I would recommend are 403Bs and simple IRAs because you can do that, the church can do that directly. If you go to an IRA or to a Roth, then you get the tax deduction, but you're still going to have to pay. It's really a wash in that sense from that vantage point. So if you get, I would do a 403B and I would do or a simple IRA because then you don't have to pay the self-employment tax. You'll still get the same tax benefit federally and statewide with an IRA or with a, well, you don't with a Roth, but I would do a 403B and I would do a simple IRA, and I've got a friend that does that. If you got questions about that works with preachers and churches on that too. So did that answer your question? That's the reason. IRA, you're still going to pay self-employment tax, 403B or simple IRA. You're not if the church does it directly. And most of them have zero problem in doing that. They're trying to help you, and they want to do that. Somebody else had a question. Yes, sir.
I know you mentioned earlier about the difference in the standard deduction and how that may or may not affect itemization, but you have work-related expenses. Can you get reimbursed for it using this and then itemize it for the deduction too?
No, it's one or the other. So if you get reimbursed for it, you get a tax-free benefit, but you can't go back and claim it again because technically it didn't come out of your pocket. Technically it came out of the church's pocket. Does somebody else have a question? So with the compensation, again, just by setting things up in this way and in this fashion, you can save a lot of money. And if you're just, we're going to give you a check, we're going to divide your salary by 52 and give you a check. I've seen $4,000, $5,000, $6,000, $8,000 a month difference, just depending on the amounts, depending on your accountable reimbursement plans. Now, this requires a little bit of planning, and it requires the agreement and the cooperation of the church. And I've seen a few places where they said, nope, this is the way we've done it, and this is the way we're going to do it. And there's a couple of different ways to handle that. One of them is to say, I appreciate that and I respect that, but if we can't do this, I'm going to need X amount more money because I'm going to be paying additional taxes, and so I'm going to need more money. Sometimes that helps folks say, well, on second thought, we might be able to do this. And some of them will say, this way we've done it, we're not going to give you any more money, and that might not be the best place for you. One of the suggestions that I would make is wherever you go to preach, find out really quickly who the treasurer and the check writing person is and make them your new best bud. Because in all likelihood, particularly in smaller congregations, this person is going to be an unpaid volunteer. They're not getting anything financially for what they do. And the last thing that they want is their life complicated to a larger degree. And so when you're able, or you have a tax person that's able to communicate with them to say, look, I don't want to complicate your life. There's significant tax savings here, and I could easily show you on a half a sheet of paper what I'm going to need and how simple it is. That generally works. And that person often wants to help you as well. But if they're confused about it, and if they think, I don't know this, I don't understand this, they're going to go back to the elders or the leader and say, I don't do this. Go get another treasurer, or go, I can't do this. And you don't want that to happen. So work with them. Plow, prep the soil, and get them to a point where they can understand easily. As far as the housing allowance goes, it's a statement in the compensation agreement, and the compensation agreement would say something to for the year, $12,000 will be allotted as a housing allowance. And then what I do, or did when I was doing this too, your housing allowance has to be designated in advance. And so what I would do is I would put a phrase beyond that. This housing allowance is designated for $12,000 a year, and for all future years unless modified by writing by both parties. So what that does is it makes it perpetual. And then if you happen to forget to do your housing allowance allotment every year, you've already got it perpetually set in that compensation agreement. That's what it's going to be. Hopefully you're changing your compensation agreement every year. The housing allowance may or may not change. But that's one of the things that I recommend in regard to the housing allowance is put that in the agreement and put it perpetual for all future years unless modified by both parties in writing. One of the things that comes up too is, okay, so how should I designate my housing allowance, and what happens if I don't use it all? I always encourage people, if you're going to miss on the high side, because if you designate $12,000 and you only spend $10,000, then the only thing that really happens is you have to add $2,000 back to your federal tax return to pay tax on. But if you designate $12,000 and you spend $15,000, you can only use the $12,000 that you've designated. And so that's one of the things too. And so people, the next obvious question with that is then, okay, so what is the housing allowance maximum? How do you come up with that figure? And there's really two numbers. It's an or situation. The IRS came back some years ago and said, okay, your max housing allowance is this, because people were abusing it, not necessarily in the church, but it's the fair market rental value of your house furnished plus utilities. First time I read that, I thought that's really nice, but how do you determine that? It's really nice to put that on paper. And so I would talk to agents, IRS, state agents. I'd say, so what do you guys use to do that? They just kind of smile. Don't have an answer yet. Basically, some of the information I've read said, okay, go out and get a realtor in the area and say, okay, the house would rent for $800. The utilities would average $200. So that house furnished plus utilities is $1,000 a month. So your max would be $12,000 a year. Some have said 1% of the value of the house. So if it's a $100,000 house, you'd have $1,000 a month. If you had $200 a month in utilities, you'd have $1,200 a month there. So when you look at that, the IRS, and if you live in a state that has state taxes, I've never seen them get really bent out of shape over that unless somebody just totally abuses it. They don't want to argue over $2 or $12 or $100 or whatever. They're not terribly interested in that. Just come up with a good number in regard to what the fair market rental value would be of that house if it was furnished, and the utilities that go along with that. Most real estate agents can give you a pretty good range there. I always tell folks, hey, stay on the high end of the range. If you got a range, use the high end because you're going to get, more money. Questions about the housing allowance and kind of how that works? Yes, sir.
If you own a house,
Mm-hmm.
it still goes by the rental value?
It still goes, yeah, it still goes, the max still goes.
Determine if you spend all of it.
Okay, let me make sure I'm understanding your question. Are you talking about if it is paid for?
Paid for,
Yeah, if it's paid for, the max value is still the same. You're going to have less to put in it just simply because you're not going to have a house payment. So if you have a house payment, you've got more to put in there, but the max is still the same whether you own it or whether you own it. Does that make sense? Okay. Somebody else had a question? Yes, sir.
In the past, I've been told of something called a parsonage exclusion
Mhm.
resolution. If they're providing the house and you're living in it,
Mhm.
is that different from what you're talking about here? Or?
Okay, great question. So what happens if the church is providing parsonage or a house? So you're paying, in some cases, nothing. What you do in that case, if you've not exempted from Social Security, and we'll talk about that after a while, if you've not exempted from Social Security, you have to pay self-employment tax on the fair rental value of that house plus the utilities that they pay if they pay utilities. And so let's just say the house is would rent for $600, and the utilities cost are $400 a month, so that'd be $1,000. So you'd pay self-employment tax on $1,200 or on $12,000 a year. Now, in some cases, you have to furnish the utilities. Even if you're in a parsonage, I still recommend to have a housing allowance. It's going to be a lot smaller because, again, you're not going to be paying mortgage payments or things like that. You're not going to be paying rent, but you can still claim things like furniture. You can still claim things like you need some insurance on that, on the contents of the house and things like that. So I would strongly encourage a housing allowance if you're in a parsonage, even if they're pretty much paying for everything. So with a parsonage, you're just paying whatever the value of that parsonage is. You're paying that on self-employment tax. Does that make sense? Yes, sir.
You can still get the same housing allowance in a parsonage? Is that what?
Yes, generally speaking,
Taxes on it anyway, right?
yeah, you're still, it's normally going to be lower just because you're not going to be making, most of housing allowance generally ends up being the mortgage payment. And you still got other things, furniture and appliances and things of that nature, lawn mowers, yard work, things of that nature. So you can still do it. It's just the fact of you're going to probably have a lower amount, and you're going to have to pay self-employment tax on, let's just say it was $4,000, the housing allowance on the parsonage, and let's say you used all $4,000. So, and let's say that it's still rented or would rent, and the utilities would be $1,000, so you'd pay tax on $1,000 a month, $12,000 a year, plus the $4,000 that you used as a part of the housing allowance. Yes, sir.
Just one more so with you. Say you have the parsonage or even without it, if you have housing expenses, say furniture, renter's insurance, or whatever it is, you have to be able to document that so you can justify how much of that allowance you end up using.
Exactly. Great point. You need to keep up with that. That money, is unlike what you do with accountable reimbursement. Accountable reimbursement, you go and you present that to the church, the treasurer, they write you a check. The housing allowance is all on you. They just designated that block of money. It doesn't have to be paid separately. It can be paid as part of the salary. But for housing allowance, you keep up with it, and then if there's any underage, then you would report that as additional income on your tax return. So, but yeah, you're totally responsible for keeping up with that. Other questions? All right, before your eyes look any more like Krispy Kreme donuts, let's take about a 10-minute break, and we'll come back in and we'll go from there. I'll be here if you got some questions you want to ask during the break. Crank back up. Is anybody's head hurting yet? A little bit? Wow. This stuff will tend to do that just a little bit. A couple things as we kind of transition and go forward. We've basically talked about the money that the church pays a person. And so as you work for the church, it's important to get these agreements set up. It's important to divvy out your compensation in the most tax-effective way. It really does make a difference. Also, you probably will have income that is non-related to your work at the local congregation. In other words, you may go speak on a summer series, you may go hold a gospel meeting, income of that nature. How do you deal with that? Where does that go? That money would not go as a part of your W-2 and things of that nature. It's separated. That money would go on a form Schedule C, and all of the related expenses to that would go on that Schedule C as far as expenses, your mileage, and things of that nature. So you want to make a distinction there between your church income and expenses and your other, for lack of a better term, income and expenses that relate to monies that you make through other speaking engagements and things like that. Does that make sense? I had a question during our break about tax preparers. Who should prepare your taxes? What's the smartest thing to do there? What I'm giving you is an opinion. You might be able to find it in Jude chapter 2. But you need someone that understands preachers' taxes. You may think you're saving money doing it TurboTax or doing some other online thing, and you might be. But you may be costing yourself a lot more money or potentially causing tax problems with the state or with the federal government just simply because there's certain things you don't know, understand, whatever. Will Rogers made a statement. He said, we're all ignorant just on different subjects. And that's true. And, you know, if you would take your own appendix out, you probably need to do your own taxes. But seriously, if it's important, I mentioned earlier a friend of mine that I've known for a long time. I highly recommend him. There are other people. I just don't know them to recommend them. Your average tax preparer is not going to know a lot about preachers' taxes, and that's not a knock on them. Your heart specialist is not going to know a whole lot about, you know, if you have foot problems. And so make sure that you have someone that understands. If they get kind of a funny look or a dazed look when you say accountable reimbursement plan and things of that nature, housing allowance and add back for Social Security and things of that nature, that may not be the best person for you. Find somebody that understands, because they're going to be able to do two things in all likelihood. They'll be able to help you, and also they'll be able to relate information to your congregation. We sometimes can understand things well enough where we can understand it, but we don't know it necessarily well enough to explain it to somebody else. I've had numerous conversations in years gone by with elders and church leaders where the preacher said, hey, I understand this, but I'll never be able to explain it to their satisfaction, and if I do, I'll never be able to answer all the questions they've got. And so I'd pick the phone up and give them a call, and we'd talk and go from there. So make sure that you have somebody doing that. It's different. It's unique. And you may study enough on your own to know this, but being able to know what the changes are, when the laws change, when the rules change, when things of that takes place, you're either going to have to really stay on the ball or you need somebody that's doing that. And there's some extremely competent tax preparers that very honestly would say, that's not my field of expertise, or I don't know that much about it. Unfortunately, there's some tax preparers that would try to muddle through it and figure they could get it done, and they might. I'm just saying my recommendation is find somebody that understands this stuff, that does it, and that understands the ways to minimize your taxes if that's important to you. All right, so let's talk about the housing allowance update for a moment. You may or may not have heard that back in 2013, Judge Barbara Crabb in Wisconsin struck down a ministerial housing allowance as unconstitutional. And you're going, okay, 2013, this is 2018. What are we doing talking about housing allowance if this judge struck it down as unconstitutional? Well, in November of 2014, there was an appeals court that reversed the November decision. And so the housing allowance is still available at this point in time. It appears, at least for the time being, to be safe. Some of the things I've read are that they may potentially put a cap on it. Now, this is not law yet, but the cap they're looking at is somewhere in the neighborhood of $50,000. So it's not like, you know, if you've got a housing allowance of over $50,000, let me know where you're preaching. So, but right now, it seems to be okay. There was a perfect opportunity with all of the changes that took place in the recent tax bill to have eliminated. A lot of things were eliminated. It was not eliminated, so while I can't guarantee that it'll last forever, at least for the time being, it appears safe for a year or two till somebody else makes a challenge or whatever. There are too many other situations where this fits, military and other things, that I feel comfortable about it going forward, but certainly keep your eyes open there. One of the things that's really huge and challenging and difficult, not just for preachers but for everybody, is health insurance. And not because it's the law, but because it could have a financially disastrous effect upon you if you don't. You need health insurance. And it's very expensive. There was a time when we could put that as a part of our accountable reimbursement plan, and then that was too good to be true, so they basically stopped that from happening. They eliminated that exclusion in December of 2013. Group insurance or group health insurance paid by an employer is non-taxable. So I guess to kind of quantify that a little bit, it used to be that we could pay our own health insurance, make that a part of our accountable reimbursement plan. It makes it non-taxable for federal, state, and self-employment tax purposes. They took that away and said it's still deductible, but you got to go on Schedule A, and you're still going to have to pay self-employment tax, and you may not have enough to itemize. Now, if you have group health insurance, it's not taxable, but most churches, most congregations don't have group health insurance. Now, there's some good news on this front, some things that I was researching and reading lately. There's something that President Trump signed into effect called the 21st Century Cures Act, and under certain conditions, you can have a standalone HRA, often referred to as a QSE HRA, that you can be reimbursed for your health insurance. And you're going, what in the world did you just say, and what does that mean, and how does that work for us? A standalone HRA can be set up by any employer that has less than 50 employees. And in doing so, they can set up classes, they can set up amounts, and by classes I mean groups of people. They can set up amounts, and they can reimburse certain health expenses tax-free up to certain limits. And what that includes is health insurance. And so there's a possibility now, and there are 2 or 3 companies out there, Zane Benefit, and I can't remember the other one off the top of my head, but there are companies out there that will administer these. You can do your own administration. I don't know, or the church can. I don't know at this point that I would necessarily recommend that, but there's a possibility of that happening. But I would encourage you to investigate that, see if they're willing to do that, because that could save significant amounts of money. Because I think one of the limits is up to $10,000 a year. Well, if you take $10,000 a year at basically 30%, your self-employment tax and income tax at even a low level, 30% of $10,000, that's $3,000 a year you could save with this standalone HRA. So that's something I would look into with the congregations where you're at. And if you need more information, I can shoot you some more information on some places that you can look and find out more specific details. But that's a really challenge now to get insurance that's affordable, and when it's affordable, it has high deductibles oftentimes, and so we go back to the emergency fund and we talk about that a little bit. Here's another reason, because you never know when that's going to have an impact. Questions about health insurance? Yes, sir.
Couldn't the church establish an HSA for you?
They could. They could. So that's an alternative as well. There's an option there. Yes, sir.
Is it possible for the church to pay the health insurance costs directly rather than reimbursing you?
There was a time, they're still a little bit iffy on that, the stuff that I've read, but a lot of companies now won't let the employer pay it directly unless there's a group plan. And so that was kind of the iffy of that, and it was kind of a discriminatory thing as well. So that standalone HRA would do not exactly that, but it would get it back under the deductible side versus having to pay tax on it. Other health insurance questions? I wanted to mention a couple things, and I just really want to mention them. I'm not necessarily promoting them, and I'm certainly not necessarily being critical of them, but there are some alternative health insurance type programs out there. One, if I remember correctly, is called Liberty Health Shares, and another one is called Samaritan Ministries. And what you do with those is, it's not health insurance, but basically you pay money into a pool, and when people have medical needs, their monies are paid out of that pool. Samaritan Ministries, I think, you may pay $400 this month, and you may pay $100 to person A, $100 to person B, $100 to person C, $100 to person D. So again, I've not researched them enough to have any real concrete opinion one way or another. I know they are alternatives to regular, normal health insurance. A good friend of mine, an attorney, I know he has the Samaritan's Ministry plan or is a part of that. I know they've had one, maybe two children since they've had the plan. And they like it, and it's far less expensive than your normal health insurance. There are rules with it. There are rules. You've got to adhere to certain things, which would absolutely be no problem for you guys, but they're very health conscious, no alcohol, no illegal drugs. You have to have somebody from the church or somewhere to sign something stating that you attend regularly and that you're trying to live a life, I think, if I remember one of the purpose statements, a life that's following in the footsteps of Jesus. So what they're basically trying to do is take people that are living a cleaner, more healthy life, and which is going to, in turn, decrease the cost of health insurance or health expenses, and then pool it together. Are any of you familiar with any of the alternative? Which one?
I've heard of that Samaritan
Ministries.
We're looking into doing that.
Okay, all right. And again, I'll be happy to give you the name of, if you're interested in looking at it, I'll be happy to give you the name of a guy after class that has got it. I'm sure he'd talk to you about it. And let me restate this. I'm not recommending it. I'm not opposing it. It's an alternative that you would need to make your own decision on. I just know it's far less expensive than traditional health care or traditional insurance is. 2 ways to pay your taxes. The first one is my preferred one, to have the church withhold and send in taxes. Now, again, depending on the size of the congregation, they may or may not have something in place where they're doing this already. If they do, that's great, because what you can do is figure up, or have your tax preparer figure up, okay, so for this year my taxes are going to be $10,400. That's $200 a week. Withhold $200 a week and send that in like they do already. They may have a secretary, other people. Some congregations are not going to have any withholdings they're sending in, and you fall into one or two categories there. They'll either say, hey, tell us how to do it and we'll be glad to do it. Or they may say, no, we hadn't been doing that and we'd prefer not to do that. And if they choose that, then you'll have the responsibility of taking care of it yourself. And so if they're not going to withhold, then you have the only option, really, Bible option, is to send your taxes in quarterly, figure out what they are. You should have your estimates from year to year about how much you need to send in. Send that in quarterly to the IRS and then to the state if you're in a state that has income taxes. Let me say this about taxes, too, in regard to if the church is willing to withhold. If they're willing to withhold, they cannot, by law, withhold Social Security and Medicare taxes. But what you can do, once you have your calculation of how much you need, you can have them withhold an extra amount of federal taxes that would cover your self-employment Social Security and your self-employment Medicare, and it's still called federal tax withheld, but when you get on your tax return, your federal income tax and your self-employment tax get added together, and so whatever you've paid in offsets that. So that's what I did personally when I was doing that. I would just get the church to withhold enough to cover my federal tax and to withhold my self-employment tax too, and then that way, if you've calculated everything correctly, you don't have that year-end big amount to pay. If you're doing quarterly taxes, set that money aside, put it in a lockbox, and put a rattlesnake beside it so you don't dip into it when your washing machine tears up or when somebody's tooth chips or those kinds of things. Because one of the dangers with doing your own quarterly taxes is either not putting the money aside or putting it aside and dipping into it, and then you don't have it this quarter, and then, well, I'll make it up next quarter. And next quarter, the sink burst, and then the next quarter something else happens, and you get to the end of the year, and then what? You owe the whole thing, and you don't have the money, and there's the stress, and there's the problem there, and then you've got another year starting up. So make sure you make your quarterly payments. Now, an alternative is if the church says, hey, we really don't want to do that, but we want to help you out some way. Have them withhold it, but instead of sending it to the IRS, have them, when it's time for your quarterly payment, just write a check to you, and then you take that check, deposit that check, and send it directly on to the IRS. So even if they're not willing to send it to the IRS, if they'll just hold it for you until your quarterly tax payments due, give it to you at that time, then there's much less danger of that money getting gone somewhere else at that point in time. Questions about how the taxes are actually paid, the withholding or the quarterly payments? It's important, again, to have somebody working with you that understands this so that you can get an accurate estimate for your year. Yes, sir?
I had one more question. On the ways, it's kind of backtracking a little, the ways that you divide up your compensation, is it necessary to get separate checks for each of those, or at least have it identified as to where the money's going?
It's a good question, and I'll get back here too. Okay, so in this case, and you maybe you can't see the pointer. So in this particular sample case right here, your accountable reimbursement plan, you need to get paid separately. You need to get paid monthly on that. You need to get paid separately. Your retirement designation, that'll need to go directly to whoever your retirement plan is with. The salary, you can include your housing allowance in that, which is the salary's technically $26,000 and your housing allowance is technically $12,000, which makes a total of $38,000, but you can pay your salary and your housing allowance out of the same check. So in this particular case, what you would have is, and I'm just going to say monthly for easy purposes. So you'd have one monthly check, which would be $38,000 divided by 12 for your salary and housing. You'd have one check for reimbursement, which you turn your form in each month and you get the reimbursement. And then you probably, depending on how they did the retirement, either once a year, once a quarter, once a month, whatever, but that's not going to you, that's going directly to someone else. So, and again, this is what you want to talk to your treasurer about when you make him your new best bud and say, hey, I'm not wanting to make your life more complicated. I want to simplify it. And, you know, I would give them, okay, I'd give them a check schedule and say, okay, here's what it is and here's when it is and here's what the check amount is. And I couldn't tell you how many times I've seen treasurers with that particular sheet in their hand or whatever, because it's easy then. But if they're having to do a bunch of calculation, a bunch of figuring and all that kind of stuff, then that's not anything that they like. Yes, sir.
On that sample right there, is there like a percentage of taxes for each one of the items that you could like go over? Like is it 30% for?
Yes, okay. Yes, no, maybe. Is that a good answer?
I mean, just a ballpark.
Right. Okay. So, accountable reimbursement plan is zero taxed. It's not taxed whatever to federal, state, or self-employment. Your retirement designation, zero tax. It's not taxed anything. With your salary, what you have to do, it's not so much that you can throw an assigned number at it. What we did when I worked in the business was we would go in and figure, basically you're doing a tax return in advance, and we would plug in and see, so what's the number? So I'll just throw some numbers out there and just say, I don't know what the totals would be. So assuming you're the only person working, you're going to have $38,000 less $12,000, so you're going to have $26,000 income. I'm going to pretend you have no other income. You've got $24,000 as a standard deduction if you don't itemize. So you're going to be paying income tax on $2,000 at 10%, and then you're going to be paying tax on self-employment tax. You're going to be paying on the $38,000 at 14.1413. I don't know exactly what that amount is, but I can't do that math in my head. So did I lose you there? We'll go old school when we use the board. All right, so $38,000 minus $12,000, which is housing. So your W-2 is going to read $26,000. Okay, so I've got $26,000 here on my tax return. All right, so I'm going to have 1/2 of my self-employment tax. Somebody got a calculator and tell me what 38,000 times 0.1413 is? One of these fancy phones that's got a calculator on it. 38,000 times 0.1413. 5,000, okay. Do I?
5,369.
All right, so we're going to say, I'm going to say 5,200 just because it's easier for me to do that math. All right, so you got $2,600 here. You get half of that off, and then you've got standard deduction of $24,000. Which means you're going to pay zero tax, and you're going to pay 53. What was that number? 53?
69.
All right. So you're going to pay $5,369 in self-employment tax. So that would be your total tax bill just on that sample right there. That's married filing jointly with no kids. Guess where all your money is? It's in self-employment tax. And we're going to talk about that in a second. Matter of fact, we'll probably talk about it right now. You have an option. And your option is to exempt from self-employment tax or to pay self-employment tax. Now, when you're sitting here looking, thinking, whoa, you mean I've got an option to avoid that altogether? If I don't pay that, what am I don't have any tax. I'm good. But it's not as simple as just, do I want to or do I not want to? And I want to run back up. All right. If you exempt from self-employment tax, and I preface this by saying I have, of the dearest friends I have on this earth, I have folks that are in Social Security, and I have folks that are not in Social Security, and I have never been and will not today become the judge of who's right, who's wrong, is right, is wrong. What my position has always been is to inform folks that I appreciate what the law says, and then you have to make the decision going forward. So you have to file a form 4361 if you're going to exempt from self-employment tax. You have to do that within 2 years of the time you're licensed, ordained, or commissioned. What problem do you see real quick there? We're not licensed, ordained, or commissioned. So generally speaking, what the IRS would recognize is when you come into the full-time ministry, when you leave MSOP and begin to preach, your clock would start ticking at that point in time in most cases. This is not the entire form. This is just the part that I would encourage you to get the form and read it, Form 4361. But the form in part says, I certify that I am conscientiously opposed to, or because of my religious principles, I'm opposed to the acceptance, parenthetically, for services I perform as a minister, of any public insurance that makes payment in the event of death, disability, old age, or retirement, or that makes payment for medical care. Now, let me explain that the best way I know and the best way I understand. And we'll just kind of take it phrase by phrase. There is a conscientious objection, or there is a religious objection. Now, I don't know of a Bible verse or a passage, an example, or an inference that would suggest what it's about to say I'm opposed to. I'm not opposed to paying in. That's not what it's about. It says I am opposed to the acceptance of any public insurance that makes payment in the event of death, disability, old age, or retirement, or that makes payments for medical care. That says that I am opposed to receiving Social Security when I turn 62, 65, 70, whatever. I'm opposed to receiving that. Not that I'm opposed to paying in. I'm opposed because of conscience, or I'm opposed because of religious principles to the acceptance of it. I'm opposed to receiving Medicare because Medicare is a social payment for medical care for people once they reach age 65. There's nothing in this that says it is a financial decision. One of the things that I've heard people say in regard to this is, I can be a better steward if I don't pay this Social Security tax or this self-employment tax, and I invest it on my own, and I'll have more money and I'll be a better steward. I wouldn't argue the latter. I would question the former from this vantage point. The form doesn't say anything about stewardship. Now, if someone says, well, that's my opposition, that's my religious principle, I'm not going to argue with that. I'm not going to say, well, that couldn't be that under any circumstances. I'm just saying the form states that I'm opposed to the acceptance of these things. It would throw a person somewhat in quandary if there is a opposition. If you have a spouse that pays in, are you going to let that spouse accept Social Security? Are you going to let that spouse accept Medicare? And even if you don't pay in, generally speaking, you're eligible for Medicare based on a spouse's situation. Are you going to refuse that? If you think health insurance is high now, look at it at age 65 or age 70 or 75 or 80. If I say I'm opposed to receiving this these benefits, in good conscience, I can't receive them. And so that's the part that I always point out to people is you need to make sure. I'm not going to risk my soul over paying self-employment tax or not. And I'm not saying people have or have not. I'm not making a judgment on other folks. But it says what it says, and you have to sign this and say, this is what I believe. And it's either conscience or it's religious principles, but I'm opposed to receiving it. And to be consistent, then you can't receive it. And there are a lot of guys that, I say a lot, there's a significant number of guys that have worked secular jobs either prior to or after their ministerial work and gained enough that may be exempted and gained enough hours to be able to accept Social Security. My question would be, what's the difference in accepting that Social Security and Social Security that you earn or that you pay for as a minister? So that's what the form says. That's what you have to sign. Also, you have to sign saying this: I have informed my church that I am conscientiously opposed to, or because of my religious principles, I am opposed to the acceptance of any public insurance that makes payments in the event of death, disability, old age, or retirement, or that makes payments for medical care. So not only do I have to sign it, I am also required to tell the church where I preach, I am opposed to this. Now, you may not have any problem telling them that, but in the consistency, and that's one of the things that we try to preach is consistency. And consistency, it's our job, if we opt out of Social Security, to inform the church of our decision. Questions about self-employment tax and opting in and opting out?
Once you opt out, you're out.
You're out. There's been one time that I can recall that 70s, 80s, I forget, that they offered an opportunity for people to opt back in. Will there ever be another opportunity? I don't know. I had some people, good friends of mine, that said that opted back in. And they were extremely sincere in opting back in. This was not a ploy on their part. Because, and one of the reasons I take time to point this out to you is because I have people that have opted out that said, nobody ever explained this part. Nobody ever explained it this way. They only said if you want to be a better steward, or if you can do better things with the money, or things of that nature. I had one person say they called the IRS and said, I'm thinking about opting out. What do you think? And they said, well, are you opposed to abortion on demand? They said, yes. And they said, well, then you can opt out. Abortion on demand didn't have anything to do with that. And that was the IRS's answer. Now, obviously, it wasn't a correct answer. So there are a lot of people that may have opted out that, upon learning differently, would opt in if they had the opportunity. But you're correct. Once you're out, you're out. And unless they open another window, it's that way until. Yes, sir.
And the example that you put up there on the board, with the 26,000 and then the standard deduction and the zero federal and state income tax. If you have refundable tax credits, I presume that could take care of the self-employment tax, or at least a large part of it?
It could, if you've paid money in, or in this case, if you had kids or some other credits, dollar for dollar credits, that, it could offset some of that.
A related question to that, you mentioned the change in the child tax credit with the new tax law. Is there a limit on the number of children for which you can claim the credit?
Not that I'm aware of. So. Let me be quick to warn, you will not be able to raise a child for $2,000 a year. So if you're doing it totally for the tax credit, I wouldn't do that. Yeah, it's not worth it. But yeah, I'm not. But if you've already got them, keep them. So other questions on the self-employment, or maybe, and two, if we took this example, you actually would probably have a little tax because you wouldn't have your self-employment, half of that deduction. So you'd have about $2,000 there, which at 10% would be about $200. So you'd be looking at paying $200 instead of $5,300. A lot of what you're going to pay in your lifetime as a preacher is going to be self-employment tax. But when you look at what you get back, if Social Security still exists at that point in time, which I don't know, nobody can say or answer that question, but Again, it boils down to, can I sign this form? If you can sign it in good conscience, then, and that's what you need to do, you need to do that. And if you're willing to do that, if you can't, then you need to just make arrangements to pay the tax and go forward. All right. Important attributes paying the minimum amount of tax. And we've already talked about these, but I kind of wanted to, I got two things I want to mention, and we might get out a little bit early. But the important attributes are number one, set up that compensation agreement in advance. I can't tell you anything today that's more helpful than that statement, is setting up your compensation agreement in advance. The second one of those is be a good record keeper. How many of you are good record keepers? How many of you are not good record keepers? All right. You know whose money it's going to cost? Yours. So if you don't care that you pay an extra, seriously, it's an area that's not a lot of fun. Nobody wakes up in the morning saying, ooh, I want to do some record keeping on my taxes today. Or wakes up at 2 o'clock in the morning saying, I just got to get up and I got to do some of that. But to be a good steward, to be financially responsible. And there's some apps out there. Some of you guys were mentioning at the break some apps. What was the one about the mileage?
The mile like you.
So Brother Bland, I think, mentioned that one. There's some, you guys are tech sharp, tech savvy. There are a lot of ways to do this stuff. Most of what we're talking about takes, on the average, less than 5 minutes a day, less than a couple hours a month to do that. And it's extremely valuable from the standpoint of being able to minimize the taxes that you ultimately pay. The third one is, and I've mentioned this, but I want to hone back in on it again, a tax preparer who's familiar with taxes for ministers. Because if you don't, one of two things are going to happen. In all likelihood, you're going to pay more taxes than you would have otherwise. If they don't understand what we've talked about with the need for an agreement and a housing allowance and things of that nature, they're not going to be able to do the best job for you or for the congregation where you're preaching. Or they may do something unintentionally, but that puts you in peril, because guess what? If I do your tax return, it's all messed up. Who's liable for the taxes? You are. I can say, oh, my bad. But it ain't my pay, it's just my bad. So you're the one ultimately responsible. So make sure you got somebody that understands and is familiar with the unique situations of ministers. The last thing I want to talk about today is charitable gifting. One of the things that I do where I work, and also just in speaking to congregations, is I do some work on stewardship. And there's really kind of three different areas. I'm only going to talk about one of them today. The other two are time and talent. But this particular one, what you become is a trusted advisor and a center of influence as a preacher, because as you teach the word and as you live a godly life, people will look up to you and they'll come to you and they'll ask you questions. And nobody can know everything, but there's some things in regard to gifting that I want to make you aware of. It may or may not have a personal implication, but it certainly probably will where you preach from time to time. And so gifting opportunities during life, at death, and after death. And the first one of those that I want to mention is a will. And I encourage people, if you have the opportunity and if you have for the love for the Lord, include the church. Include in Brother Clark, Brother Bland, Brother Liddell. We've spent quite a bit of time in talking about ways to enhance the encouragement for people to gift to the school. I mean, you guys are here because somebody cared. Somebody cared about you. You're here because of the sacrifices that people have made, not just for your personal time here, but in the facilities. And this wasn't government gifted, government granted. Somebody paid for every single thing. And so we try to encourage people that are like-minded in a gifting sense on some different ways to do that, to put people in their will. I'm debating on whether to ask or how to ask the question. I think I'll do the easy route. Don't raise your hand. But do you have a will? If you don't have a will, get a will. Not so much to give money away, but if you don't have a will, the state's got one for you, and they may not distribute things the way that you want them distributed. How many of you in here have children? If you have children and they're still minor children, if you don't have a will, you're not deciding where those children go if something were to happen to you and your spouse simultaneously. Every person needs these three documents. They need a will, they need an advanced medical directive, and they need a durable power of attorney. That takes care of you at death, that takes care of you near death, and that takes care of you in mental incapacitation. And there are a lot more needs for advanced medical directives and durable power of attorneys than people recognize. And they're not that expensive. I work with several attorneys. I work with 3 or 4 that are members of the church that, you know, they'll do all 3 of those for a husband and wife for $500 or $600 in most cases. That's not a lot of money to take care of things that you need to take care of. But we encourage people to leave the church, to leave MSOP, to leave other good works in their will. And so that's a really good gifting tool. I don't know who they are, and I don't know what the amounts are, but I know that the school is in some people's wills even now. Life insurance. I wish I had time today to spend a lot of time talking about life insurance, but I don't. But you need life insurance in all likelihood, because if you pass from this life, and Hebrews chapter 9 verse 27 says there's a pretty good likelihood of that. If you pass, somebody may need to be taken care of. And it may be a wife, it may be children, it may be some other things. But sometimes as you get older, and again, a lot of this is so as you have opportunities to talk with people as their preacher, as their friend, as somebody they have a lot of confidence in. Sometimes people have life insurance in later years, whole life policies. They don't need it anymore. They've got their kids out of school. They've got everything in order. And by leaving the church or leaving the school or leaving some other good work, a part or all of that life insurance, it can bless the church, bless the school greatly. And so there are opportunities. All it is a beneficiary designation, and you don't have to leave it all. A person might have a $200,000 life insurance policy and might leave $20,000 to the school or $50,000 or whatever. You can make multiple beneficiaries, but just leaving some or a part would certainly be a blessing. Property. A lot of people have property they inherited or property that they have that they don't need, they don't use. Acts chapter 4, the people that had property sold them, brought the money, laid it at the apostles' feet. They distributed to every man as every man had need. But sometimes people are hesitant to get rid of their property because somebody may say, well, I bought this property 30 years ago and it was $10,000 and property value has gone up. This area is increased. It's worth $50,000 now. If I sell this property for $50,000 and give the money to the church or the school or some good work, then I'm going to have to pay capital gains on $40,000, and I don't really want to pay all that tax. Well, they can take and deed that property. If somebody had that property and wanted to deed it to Memphis School of Preaching, they could deed it. They would get the full $50,000 market value of the property as a tax deduction or potential tax deduction, and they would pay no capital gains tax. So it's like, wow, winner, winner, chicken dinner. I get the best of all the worlds in that, situation. I can give appreciated property, not pay any capital gains tax, and get the largest deduction. Appreciated stock, it works a lot the same way. Someone may have bought $5,000 worth of XYZ stock. It's now worth $25,000. They say, I don't really need this. I don't really need all of it. So I'm going to donate. I'm going to gift that the stock to the school. I'm not going to sell it first. I'm just going to give them the stock. Well, when they give them the stock, $25,000 becomes a tax deduction or potential tax deduction, and there's no capital gains on it. So it's like, wow, I avoid the tax, I gift and help a good work out. trust. There's a lot of different ways that trust work and people set up. I was talking with someone, and I work with several nonprofits, and so I was talking with someone the other day, and they had a couple that wants to give some money. They want to give some money to this particular organization, but they need some income off of it as long as they're alive. So we're talking about a charitable gift annuity in which they would receive income the rest of their life, and then when they pass away, there's another segment of this investment that's growing, and if they live an average life expectancy, this particular nonprofit gets the entire amount that they started out with, and they were able to get income for the rest of their life. There's a certain kind of trust where the school or some good nonprofit would get income during a person's lifetime, and then the balance goes into the estate or to the heirs. There's others where they get the income during the lifetime, and then the balance goes into the account of the school or church or something like that. So there's a lot of good ways to use trust there for people that want to do that. Beneficiary designations. We already talked about life insurance, things like annuities, accounts. Maybe it's an emergency fund that somebody wants to put a payable on death designation to give that money to a nonprofit, to a charity. And you don't have to do all of it. You can do some of it. You can do part of it. Required minimum distributions. That's not impacting you guys right now, but it impacts some people where you're going to preach. Once you get 70 and a half years old, if you've got an IRA, you have to start taking a minimum amount every year. Well, some people don't necessarily need that amount, and it's kind of a hassle. It's a hassle for this reason. They didn't need the money, but now they're going to have to pay tax on it because it was an IRA. Well, you can do what's called a qualified charitable distribution, shortened as a QCD, and you can have your required minimum distribution given directly to the church or directly to the school or some other good work, and you pay 0 taxes on it. So for some people, that's a really good deal. I didn't need the money. I was going to have to pay tax on it, so I'm going to gift that to the school. Donor Advised Fund. I have a friend that preaches in Tennessee, and he had a member of his congregation that sold a business not too long ago for, it was in the $50 million range. And he had virtually nothing as far as cost in regard to it. So you can imagine the tax bill that, would incur there. And so I don't know what the results was, don't know any of the details of it other than just there was a really nice sale. But what I thought about immediately was an opportunity. And it doesn't have to be that large amount, but if you have a lot of income at one point in time and you want to make charitable contributions and you don't know where you want that to go yet, but you need the immediate tax deduction, you can stick the money in a donor advised fund, get the tax deduction immediately, and then over the course of time you can delve that money or distribute that money where you want it to go. So sometimes people use that. And the point I wanted to make today was not that there's going to be a test on this and you're going to have to answer 50 questions, but there are a lot of different ways for people to gift other than their weekly contribution check. And I want to tell you up front, if you run into those situations and you have people that want to do something and are not sure, call me. I'll, at no cost, work with them, help them to be able to do what's most effective and what's most tax advantage for them. So just some ideas there about different ways to gift. Again, you're going to run across people that say, Brother so-and-so, I love the Lord, and I love the church, and God's blessed me, how can I help? And by at least having a working knowledge or a 30,000-foot view, you can say, well, I can share some things with you, but I can also put you in contact with somebody that can help you do that as well. Questions, comments about these ways of giftings that may or not be as readily known as some others? All right. This is the slide you wanted to see, not because it's got my information on it, but because it's the last slide. Feel free to contact me, questions that you may have about anything that we made in the presentation, or maybe some things that we didn't mention that have to do with ministers, finances, and taxes, and things of this nature. Any other questions? Last call for questions, at least for this point in time. Any other questions? Yes, sir.
You talked about retirement. Does that have to do with saving up enough money so when you reach a certain age you can take care of yourself without working?
Absolutely.
Okay.
Absolutely. And what a lot of people don't necessarily understand is Social Security was never meant to be a full retirement situation. It was only meant to be a supplement. And so even with Social Security, if Social Security remains in its current stage, it's very difficult to live on Social Security alone, and even more so if you opted out. So a retirement plan, you can't start too early, and the danger is putting it off to a point to where now, okay, I only need to add $75,000 a year for the next 5 years to be able to get to where I can retire. Other questions, comments? All right. We're at that favorite part of the movie, the end. I appreciate the opportunity to be with you, to be a part of streaming on the internet, on the web today. I hope that after we finish that you decided it was better to do this than to have the root canal or to have your toenails pulled off. So hope it was beneficial. Hope it was helpful. I've got some cards up here on the front. If you want my business card information, you're welcome to that. Anyway, I can help you guys. Let me know. Preach the word. Continue to do good things for the Lord. Thanks.
Thank you.